This is Earnings Preview, a look at companies reporting during the week, along with companies which may have positive or negative earnings surprises. This Earnings Preview is for the week of July the 6th through the 10th, and it talks about earnings that are front and center once again. Charles Roplat, our senior market analyst, here to elaborate on that. Well, it is called the Earnings Preview. I mean, after all, it's only right that it talks about earnings, but we're beginning another earnings season. That was my point. And as we sit here and get ready to watch those reports roll in, is this second quarter going to be all about the forecast, both corporate and for the second half of the year?
Well, it's going to be about the forecast. It's also going to be about actual performance. When we look at who's reported so far, we've had about 23 companies within the S&P 500 report early. Not a very big group and certainly not a representative group of the index. But we have seen 18 of those 23 top expectations, so it's leading us off on a good footing here. And it does raise the possibility that we could actually see several companies not only top expectations, but really imply the 21% drop we're expecting in earnings to actually be overly pessimistic and true earnings to be better than that. Still terrible on a year-over-year basis, but not as bad. But I do think not only do we need to see companies beat, but we do need to have a sense that, yeah, they have some idea of visibility, have some idea of how things are going to play out in the second half, and that they are seeing at least a stabilization in business conditions, if not an outright improvement.
Care to go out on a limb a little bit and tell us what sectors might be some of the better performers and then which ones might be some of the worst?
Sure. I actually do expect tech to do well, and that's really big. And I've talked about this in this week's industry rank analysis too. Mm-hmm. When I look overall what's going on, we're seeing a lot of evidence that conditions are rebounding. We're seeing semiconductors are in the early stages of recovery. Smartphone sales are doing extremely well. We've seen hard disk drive makers actually raise their guidance. So I think overall we could see technology do well. And it makes sense because as CFOs are looking to control costs, they are looking for also areas where they can improve productivity. On the flip side, I'm bearish on transportation. I'm short transportation ETF in the ETF trader. But also, I think you got to look at two things. A, you have the recession going on. That's going to put pressure on both the railroads and the trucking company, less things being shipped. But at the same time, as everybody knows, gas prices and fuel prices have risen quite a bit in the second quarter. So you're looking at a combination where demand's still weak, but your costs are increasing. It's not a good combination for any business. And I do think transportation could struggle this year.
What about medical?
Medical, I think, will do pretty well as far as year-over-year growth. The obvious problem with medical is not earnings, but really political risk and what's going on with healthcare reform. So while I do expect medical earnings to really be among the strongest in terms of year-over-year growth, I do think investors need to understand there is that political risk, and that could impact share prices.
Bulk of earnings come out second half of the month, right?
Yeah, absolutely. We'll see very light calendar this week. The week after, it will be a little bit heavier. We'll see mostly the mega cap companies report, some large cap companies. But then as we start working our way into the second half of June and really the first week of August, we'll see more of the companies' overall reports. Obviously, as we get later into earnings season, more mid cap and small cap. But really, we're looking at latter half of June, first week of August, really for where we're going to see the bulk of earnings. Second week of August will probably be heavy as well, but we'll start seeing the shift towards smaller companies at that point.
Also light is the economic calendar, but still some key indicators out there this week.
Absolutely. We'll get the ISM Services Index coming out there. We'll have the preliminary University of Michigan consumer confidence. That one should be kind of interesting because when we looked at the June Conference Board consumer survey, we actually saw consumers a little bit more worried about the economy, more worried about the job situation. So let's see, when we actually get the initial University of Michigan consumer survey, which only looks at really the first week of July that they're actually surveying, let's see what they say and whether or not there has been whether there has actually been a slight increase in pessimism about the jobs scenario, and especially with the rise in the non-farm payrolls that occurred in June. It should be interesting to see how that impacts consumer sentiment.
Although the survey was taken prior to the release of the latest set of labor data, so I don't know if that's a true reading.
Well, the final one for the University of Michigan and the consumer confidence for the Conference Board was taken. This will be a brand new survey for the University of Michigan. They actually call consumers during the first half of the month, and then they follow up with the second survey during the second half of the month. So the final is more of a blend, whereas the initial is more of a smaller group of consumers.
Got it. Well, if you want to check out a couple of stocks that Charles feels may surprise to the upside this week, go to the homepage of Zacks.com and click on the headline that is right next to Charles' picture under the earnings preview banner. And you can find out all of that information at that location. With Charles Roplat, I'm Terry Ruffalo.